Say, Tim Mitchell. Hey, Tim, what's going on? D-Rob, Lucy, Rucha Holly, Argadine, Mike Sweeney back again. Blue 1559. How are you doing? Trendsetters TV, Hammer, So Me, Ali, what's going on? Brian, Kashi, Greeky's wife, Raj Likasas, something like that. Vince, Beto, Tevo, what's going on? Kyle, Jeffrey, what's happening, Jeffrey? D Lovett, what's happening, D Lovett? Tiger Dan, Chara, what's going on? Richard Piano, okay. Vince, good evening. Bito, Ruby the Rottiger, okay. Mateo, what's going on, Mateo? Mike Matten, Santos, user.com. Interesting name, user.com. What were your parents thinking when they named you? My goodness. All right, that being said, good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by The 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, looking for a simple, safe, predictable, consistent 1% per week. Now, I'm going to show you basically everything that I do that works for me. Okay, it's not perfect for everyone. Coach O, what's happening? Mateo, Mike, Santos, Alex, me, what's going on? Kyle, Jeffrey, D Love It, Tiger Dam, Manda, Morty Feed. What's going on, Morty? John, good evening. How about looking at CF tonight? Ooh, gotta love it, John. Let's take a look at Consolidated Freight. Here we go. CF, first on the list. Oh, CF Industry Holdings. Now, we've been having a little bit of internet issues this evening, so give it a little bit. All right, here we go. Now, we want to jump in and jump right to it and see exactly what's happening with CF Industries. Hold on a second there. Hold on. Big money's in the house. Morty, okay, I'm going to stop you right there so I can say hi to everybody else that jumps on. John. Okay, John, let's check this out. John, what I'm looking for is the same thing over and over and over again. A, B, C, 1, 2, 3. The way I trade is systematic. First I do A, then I do B, and then I do C, so on and so forth. So, first thing I look for anytime I look at any stock is always going to be the 1-year chart. It's simple, it's easy. I'm looking for 5 things, takes 3 to 4 seconds. It shouldn't take that long. You ready? Here we go. 5 things. You ready? Number 1, where's the high? Number 2, where's the low? Number 3, where was it a year ago? Number 4, where is it right now? And number 5, what's the overall pattern for the year? Up, down, up, down, up, down, up. We're in a little upward trend right there. That looks freaking awesome. Before we move on, let's take a gander at it. Not now. Okay. So, once I see this right here, that is a yes for me. I want to jump into this thing and see what it looks like. But before I do, cancel that. Cancel. Settings, back to where the hell I was. There's where I was. Okay. Before I go on any further, I want to see what I can make off of this. Now, considering tomorrow's Wednesday, we have 3 days left. Wednesday, Thursday, Friday, that's it. There's a strong possibility I might not get my 1% for this week because Monday and Tuesday are already gone. So think of it this way. There's 5 days in the week. Monday and Tuesday are already gone. So we got 3 days left. So I lost 40%. 40% of the possible time value. Now, you're probably asking, how do you figure that out? Well, time value is exactly what it sounds like. Time value, the value of time. So the stock market is open at 9:30 a.m. and it closes at 4 p.m. All right, so Monday morning, 9:30 a.m., 4 p.m. on Friday. That is the maximum amount of time you're going to get. The maximum amount. You can't get any more time than that for 1 week. Okay, Monday morning to Friday afternoon. So Tuesday's gone and Monday is gone. That's 40% of our time value. So let's see what we can do. Okay, 84.55 is the current price. If I'm going to do the 85s, it's going to pay me 90 cents. All right, so that works. Even though it's only 3 days, it's still going to give me my 1%. Now, let's dive in a little bit deeper, okay, and see exactly what the chart is telling me. Okay, so very first thing I want to see is where was it a year ago? 85.98. Let's call it 86. Now, the bottom of the year was 67.42. That was the beginning of April. The high of the year was on the 13th of June. And that was $100.48. From there, she drops back up, back down. What I want to show you, most importantly, is the last 30 days. Now, the reason I want to show you the last 30 days, is because stocks have a tendency, dividend stocks. Okay, the name of the show is Dividend Investing for Weekly Cash Flow, Dividend Stock Talk. Dividend stocks have a tendency to be repetitive, doing the same things over and over and over again. That's one of the reasons why I like them, because they're consistent, they're predictable, they're boring as hell. I mean, if you're looking to jump up and make a whole bunch of money, you're not going to do it with what I'm doing. Okay, I'm looking for 1% a week. That's not a whole hell of a lot. But the nice thing about 1% a week, it's consistent and it's predictable. At my age, okay, 61, okay, I don't work anymore, right? So I'm not, grinding away with the rest of you guys. I have to be reliant. Alexa, off. I have to rely on the money that I have coming in from my trading. So I'm looking for 1% every single week. Now, 1% does come to 50% per year if I'm successful with it. What am I looking for? Well, I'm looking for repetitiveness, consistency. Remember what I said? Simple, safe, predictable, consistent. That's what I'm looking for. Simple, safe, predictable, consistent. Okay, so CF. Here's your 30-day high. Here's your 30-day low. Here's where it was 30 days ago. Here's where it is now. Look at the motion. Down, up, down, up. Now, I like 2 days to the upside. Here's the bottom right here on Friday. Monday was higher. Today was higher. That right there, for me, is a perfect setup. Now, I like consolidated freight, CF. Okay, it makes sense to me. And the numbers right here make sense to me. So let's do a quick trade on CF and see what it looks like. All right. So we're going to do the 85s. Let's get rid of this. We're going to change this to covered stock. Now, when I say simple and safe, the simplest trading strategy is just to buy the stock. That's the simplest. But as a minor flaw, I wouldn't call it a minor flaw, I'd call it a major flaw. And that major flaw is once you buy a stock, you have to wait for it to move, for it to go up before you do it. And who knows how long that's going to be. Well, for me, a covered call is simple and it's safe. As a matter of fact, a covered call is so safe that you can actually do it in your IRA. So there are a lot of trading strategies you cannot do in your IRA, but you can do a covered call. It's simple, it's safe, it's predictable, and it's consistent. Now I'm going to show you those also as we progress. Now, when I say it's consistent, check this out. November 7, that's this coming Friday. 14 November, that's next Friday. 21 November, 3 Fridays away. 28 November, 4 Fridays. 5 December, 5 Fridays. 12 December, 6 Fridays. 7 Fridays, 8 Fridays. Every single Friday we have an option that is going to expire. What does that mean? Well, that means every single week, if I pick my stocks correctly, now I have 2 criteria for my stocks, and only 2. Okay, 2, that's it. 1 is consistency of profitability. That means I want to make sure I put my money into a company that's consistently profitable. I mean, like, come on, really? That is like one of the stupidest things to say. You think that would be a stupid thing to say. But as we progress through the night, if you're here often, you will know and you will see people ask to look at the stupidest things and put their money, in my humble opinion, okay, just my humble opinion, okay, They put their money into companies that aren't successfully profitable or consistently profitable. For me, two things: consistency of profitability, weekly options. That's it. That's the only criteria I have for investing in stocks. Consistently profitable, weekly options. Okay, so John, we're still looking at CF, so sit tight. Skilly, what's going on? Joey M, what's going on, Joey? All right, so that being said, simple, safe, predictable, consistent. The covered call is one of the safest trading strategies there is. If you're not familiar with covered calls, there are literally hundreds of videos explaining the intricacies of the covered call. Simply put, I'm buying a stock at a certain price. I am then turning around and selling it for just about the exact same price I just paid for it through what is called a covered call. So I'm selling it to someone else at a certain price by a certain date. Now that certain price is basically the same price I just paid for it. So if I'm paying $84.55, I'm going to sell it for 85, which is the next closest number right there, 85. Now for that, I'm going to collect whatever hell that number was, and then so on and so forth. We'll see how everything progresses as we go one step at a time. One step at a time. Let's do this. Okay, so here we go. 85, it's right there. One thing I really like about Thinkorswim, now this here behind me is being recorded live on YouTube. So it's live streaming now on YouTube. So we're streaming on 9 different channels. This screen here is live on YouTube. So you can go in the other room, pull up the big screen TV and pull this screen up. So you can listen to what I'm saying, and you can also see these little tiny numbers. Okay, you might not be able to see them on your phone or your iPad or whatever you're watching on, but it is live streaming on YouTube, which if you're up to date with things, you should be able to get YouTube on your big screen TV at home. All right, so that being said, this is a trade I want to do. One thing I like about Thinkorswim, it sets up everything for me. I want to do a covered call, great. Only thing I got to do is figure out how many of them do I want to buy. Well, I'm just going to show you one of them, one at a time. That way you can figure out, because I'm assuming we're all adults here, which means you should have a good grasp on how much money you have available. You should know what your monthly bills are. You should know what you have available to invest on a consistent weekly or monthly basis. And if you don't know, well, shame on you, because as an adult, you have to pay to live here. All right, so I just want to do one contract. You guys can figure out from there how many you can get comfortably, 1, 5, 15, 73, whatever. Okay, we're all different. Okay, here we go, glasses, so I can see. Buy one covered call CF. 100, which is the weeklies, 7 November 25, which means this option strategy is going to expire this coming Friday. So whoever buys it has 3 days to make up their mind. Now me, I personally don't care, because I'm going to explain as we progress, okay? The 7 November, this is Friday, the $85 call against the stock at the market, blah, blah, blah. Here's my profit. Max profit right there, 280. Commission, wait a minute, cost of trade, including commissions and fees, 8,200. Now, remember when I said earlier, I'm looking for simple? Well, this is a simple trade. Safe, it's safe. You can actually do it in your IRA. It's predictable. Remember I said predictable? Means I know exactly how much I'm making before I even do it. So before I even buy the stock, I know what my profit's going to be ahead of time. And no, I'm not going to buy and then sit and wait for it to move. I don't need to, because this strategy here has the profit already built in, already has the exit strategy already figured out. Great. So what I need to know now is how much am I making? So remember I said simple, safe, consistent, and predictable. 1% a week. That's what I'm looking for. So we got the simple part. We got the safe part. We got the predictable part because we know what we're making. And the consistent part, well, it's a weekly option, which means we can do it every single week. Simple, safe, predictable, and consistent. The only thing we're missing now is clarity. Is it going to work? Is it not going to work? Well, I don't have a crystal ball, so I can't really tell you what's going to happen between now and Friday. But here's the thing. Rule number one, never buy something you don't want to hold long term. If you have no idea who CF is, CF Industry Holdings Incorporated, if you have no idea who they are, then this probably makes no sense to you. But if you know who they are and you're okay with owning them, you have a couple of questions to ask yourself. Question number one, always, always, always is, does it make sense? It either makes sense or it doesn't. If it doesn't make sense, you need to watch a little bit longer, because this, what I'm showing you now, was created, put together, assembled, however you want to look at it, for my 9-year-old daughter back in 2008. Okay, I was just minding my own business, doing my daily thing. Now, I actually worked in those days, back in 2008. So I would do all my trading the night before. Because think or swim, you can set it and forget it and not have to worry about anything. So my daughter comes up to me, Daddy, what are you doing? Then she says something that changed our life as a family, as a whole. Can you teach me? Now, at the time, it didn't really mean anything. It was just like, daughter wanted to hang out with her dad, trying to learn something that her brothers weren't interested in. Believe it or not, the boys weren't interested in money. Here's a 9-year-old little girl. She's interested in trading stocks. So how do you teach a 9-year-old? Simple, safe, predictable, consistent, no way for her to lose. That's the big one. Now, we all know why that's a big one. Because number one, she's a 9-year-old little girl. If she loses her money, she's going to be sad and unhappy. And daddy, me, is going to be sad and I'm going to feel bad. But to compound on that, to make matters worse, little baby girl's crying, mama gets involved. Guess what? Daddy's sleeping on the couch for a couple of days. I had a comfy couch, I really did. And yes, I did have to sleep on it. If you're married, you know the guy has to sleep on the couch every once in a while. It just is what it is. All right. So this is the order. This is what it looks like. Buy one covered call, CF 100, 7 November, 85 call at the market, blah, blah, blah. Here's my profit, and this is what it's costing me. Great. What is my rate of return? Now, most of you, actually probably all of you, before you came here, you probably thought rate of return is something they compute on an annual basis. Well, if this makes sense to you, you're going to have to change your way of thinking. Change your way of thinking, because I invest for weekly cash flow. Every single week, I want some kind of cash flow from it. Plain and simple. If I'm going to put my time and effort into it, I want to be compensated on a weekly basis. So you have to change your terminology. It's just a few changes. It's not that big of a deal. Okay? Welcome to live chat. Remember to guard your privacy. Cool. Hey, YT Mikey, what's going on? How you doing, Mikey? All right, so to figure out the rate of return, we have to divide the profit by the investment, and that's why we figure out exactly what the return is for the week. And then we just multiply that by 52, and that's what it is for the year. Because most people are used to computing and compounding on a yearly basis. So let's do that. For that, we're going to need our calculator. Come out wherever you are. All right, here's the calculator. First thing we're going to want to do is take the 280, which is the profit. Remember? Maximum profit, 280. Then we're going to divide it by the cost of the trade, including the commissions and fees. We come up to 8,200. I'm going to explain something in a second. Hold on. Just hold on a minute. Before we go much further, give me a dime so I can phone my mother. I bet you, who knows where that came from? What song? Okay, so 3.4%. Now this is so good. I'm actually gonna save this one. I just learned how to do this. This is cool. Right there and right there and right there. Give it a second. We're not done yet. There it is. And we're going to go like this. Come on. There it is. Right there. Okay. Give it a second. There it is. Right there. Open that up. And here it is right here. The one we just did. Open it up. There it is. Isn't that lovely? Okay, buy one covered call, CF, that's the weekly, 7 November. The 85 call, 280 is the profit, and 8,200 is the investment. Cool, well. Okay, now what did we say it came up to? 3.4, right? 3.4%. And that is for this week. All right. Right there, okay? That's what we found yesterday, Monday, and Sunday. So we found those Sunday night, we found those Monday night, and we're finding these tonight. Now, wait a minute. Sunday night, Monday night, tonight. Okay, that's last week. Anyway, let's go back to where we were. There we go. All right. So, CF. I like CF. I'm going to actually write that one down. I mean, I have it up on the board there, but, it is what it is. CF 3.4. STZ. I want to take a look at that one. That's what I want to take a look at. All right, let's get rid of this. Get rid of that. Back to the beginning. Here we are. All right, well, that one looked pretty damn good. Jason, how are you today? Twin Treasures, how are you doing? Joe in Miami. How are you doing, Joe in Miami? What else do we have here? Whoa, all these. I missed all these. All right, Tyrant, what's going on? Billy K, what's going on? Did you see CL? Is that Colgate Palmolive? CL, hold on. CL, Colgate Palmolive. Check it out. Here's the high, here's the low, here's where it was, here's where it is. Look at this. Up, down, up, down, up. Okay, what's going on there? 76.55, we're looking at the 77s. That's go for 45. Not this week. What does next week look like? Next week's 77s, 95. Okay, that's 1.5%. That works because it's offering 1.5%. And if I buy it tomorrow, well, that's Wednesday. Wednesday and then next week. Okay, fine. All right, so let's take a gander. Okay, oh, that's right. Jack was right. That was Rod Stewart. All right, what do we have? All right, we did CF. What about daily bias? Nahib, I have no idea what you mean by that. How low or low time frame? Thank you, Lulu. Bill Nye, oh my G, okay. Hey everyone, Rod Stewart, absolutely right. Viper, good evening. I'll be screwed up when I start because everything he is doing is backwards. Yeah, I get it. Should I short Bloom? I have no idea who Bloom Energy is. Wish I was good at math. Jay, it's really not difficult. Should I short Bloom Energy? Not sure. We're going to take a look at Bloom Energy in a little bit. Not sure. Okay, so sit tight. So Preston, what is so dramatic about Colgate Palmolive today? It looks like it did normal everything like it normally does. Okay, what's so great? All right, so let's take a look at the last 30 days. What does it look like? Okay, not the greatest in the world. Okay, down, up, down, up, down. Now she's going up. What do we have? Just one day to the upside? Yesterday is the bottom. Okay, yesterday. Today is just one day to the upside. That's all. Now, for me to jump into anything, I want 2 days to the upside. Okay, today's only one. Colgate has a dividend tomorrow. Thanks, James. Okay, we've got a dividend tomorrow for Colgate. So, do you want it? Do you not want it? Because after the dividend, stocks have a tendency to go down. Now, let's take a quick look. We haven't done this in a while. Let's take a quick look. What does Colgate normally do this time of year? For that, we need the seasonality chart. Now, if you don't know what a seasonality chart is, here we go. All the way to the left is January 1st. All the way to the right is December 31st. Okay? This little blue dot right there represents today. The blue line, that is this year. That's how the stock has moved this year. Okay, down, up, down, up, down, up, down. Here we are right now. What does it normally do? The red line is what the stock normally does on a year-to-year basis based on 10 years of history. So they take 2015, 2016, 2017, 18, 19, 20, so on and so forth. 20 years, that's 2 decades. 2 decades, wait a minute, no, sorry. 10 years. 10 years of average movement. So it looks like Colgate-Palmolive goes up this time of year. So why the hell not jump into it? That's what she does. Okay, nice upward move. This is today, right here. So that looks pretty darn good. Now, that's not guaranteed. That's just based on what did it do last year? What did it do the year before? What did it do the year before, the year before, the year before? So the last 10 years in a row, that's the red line, the last 10 years. That's the movement. So it looks pretty good. But the numbers, well, they're not really jumping out at me, anything special. Okay, the last couple of weeks. Here's the high, here's the low right here, yesterday. Okay, the high's here, the low is yesterday. Today's just one day of the upside. So if you really like Colgate-Palmolive, just wait a little bit. Coach JV, what's going on? Good message. Me and a guy due to invest during the bull run. Coach, I don't like when you do that. All right, hold tight, hold tight. All right, just give me a second. I don't like it when people do this. There we go. All righty. Alrighty. Yeah, Preston, I saw Colgate-Palmolive. It's not as clear as you would like it to be, or as I would like it to be. But yesterday,
I can't see you anymore.
You can't see me anymore?
No, I just see your little dividend talk with your picture on it.
You do? Oh, wait a second. There we go. How's that?
Okay, got it.
That works?
Thank you. Yeah.
All right. Sorry about that. Okay, so not 100% clear, not sharing the same sentiments as you do. I like 2 days to the upside. We only have one at the moment. So me personally, I wait until next week. I'm going to put Colgate down for next week because today's Wednesday. No, today's Tuesday, which means tomorrow's Wednesday. That means you get 2 days. That'd be on Thursday. Wait a minute. Tomorrow would be day number 2. Thursday would be the 3rd day. Yeah, so more likely Thursday or Friday. I would jump in Thursday or Friday. I'm a big fan of dividend growth stocks like Caterpillar. User 259, Caterpillar's a dividend stock. Actually, it's a dividend king. That's 5 decades of increased profits. But no, not this week, dude. Definitely not. Okay, here's the bottom of the year. Here's the high of the year right there. 4 down days in a row. Goes from 275 up to 600. Now it's pulling back. Starting to pull back. All right, what do I, wait, all these questions. I missed all these questions. How could I miss all these questions? All righty. Wow. All right, Arg, Hammer, Psalm, what's going on? Kashi, going on, Greeky's wife. We seen all these. Seen all those. Oh, what do we have here? Oh, Gabriel. Just curious. AGNC. All right, so who came up with Caterpillar? Okay, someone came up with Caterpillar. Look at this. Up, down, up. Now she's coming back down again. Not quite where I want to jump in. D Love It. With the market down today, did you roll your strikes down? Nope. No, I didn't. All right, let's keep on keeping on. Waste proofing and fire stopping. Seal tight. What's going on? James. Uh-oh. I wasn't complaining, just expressing. All right, Dave. I'm not sure wants to take a look at Bloom. I have no idea who the heck Bloom is. Bloom. Bloom Energy. Okay. So, not sure Bloom Energy, Bloom is not coming up. Whenever I see this right here, we cannot find that symbol. That means it's probably not a U.S. stock. That's probably what it means. So let's keep on going. Rick, how are you doing? Gina, good evening. Dan, Beth, Bebop Beep, what's going on? Paul Davis, let's go. Bito, how are you? Never swim backwards. Okay, kind of makes sense. Jacob, Dixie, nobody's joined. Everybody say hi to nobody. What's going on? Augie, Lex, Shaba, Mike, Tim, Dixie, Navarro, Fan, Todd, John Boy, Mark, Josh, Mike Sweeney back again, Joey D, Eric, Robert, David, Cow. All right, wow, a lot of people showing up. I can't say hi to everybody. Way too many people. Okay, BP Benhar wants to take a look at Oracle. ORC. Did you take a look at Oracle last night? I think we did. Take a look at this. Here's the high, and it just keeps on dropping. Now, don't get me wrong. I like Oracle. I do. But what I'm looking for, me personally, I'm looking for the bottom. Okay, here's the top here. Down, up, down, and just keep going down. 248 at the moment. Now, don't get me wrong. I'll take a look at Oracle tomorrow or the next day, and I'm looking for the bottom. Okay, new bottom today. It's got to stop somewhere. Is there anywhere else where you live stream CTails? CTails, where else do I live stream? 9 different channels. 9. Okay. I don't know them all off the top of my head. David, good morning. No brunch, no life. Interesting name. Dave Starr, how are you doing? David and Lisa in love. How are you, David and Lisa? KG4, what's going on? What are your thoughts on the Verizon CEO? Well, let's see what he's doing. How has it affected the stock? Well, let's take a gander. Here's Verizon right here. Here's the high, here's the low, here's where it was, here's where it is. Look at this, up, down, sideways, down, and up. Okay, let's zoom into the last couple of weeks, see what this thing's doing. Interesting. Here's your high right there, 44, drops down to 38, shoots up, pulls back, but it is in an upward trend. It's at 39.32. The 40s for this week go for 9 cents, 40s for next week go for 24. Now, I really don't care about the CEO, but if I'm buying it at 39 and I'm trying to sell the 39s for next week, I'm only getting 39s. If I'm going the 40s, I'm only getting 24 cents. No, that just doesn't work because I'm looking for 1% or more. 1% or more. So if it's at 39.32, more than likely I want to do the 40s, which is right there, and the 40s are going for 24 cents for next week. So that's going to be a no. That's a no. What about Altria? C Trials wants to take a look at Altria. Now, normally, this right here would scare some people away. However, let's see it for what it is. Okay, so here's the high of the year. Here's the low of the year. Here's where it was a year ago. Here's where it is. Look at this. Up, down, up, down, up, down. Now she's going back up. This right here, I want to zoom into that and I want to explain that just a little bit so you understand what it is you're looking at. Now, for some strange reason, whatever that reason is, the stock dropped right here. Now, usually that comes from either earnings reports, quarterly reports, something going on in the news. So, to be 100% honest with you, I don't know what it is. If you're thinking about Altria, you should probably check and see what that is right there. But let's look at it for what it is. Here's your 30-day high. Here's your 30-day bottom yesterday. Now, this is what you call a gap down. Now, she went from 63 all the way down to 56. It gapped down. And gaps on a stock like Altria have a tendency to fill. So after you figure out what this is, this baby's going to turn around and start going back up, and it's going to fill that little hole and could come back up to 62 eventually. Now, who knows if it's going to be a week, 2 weeks, 3 weeks. But eventually, that gap will fill if you're looking for, an idea. All right, so I like to have 2 days the upside. We're going to put this one on hold also. Take a look at it later because we only have 1 day to the upside. And I want 2. All right. CL option chain went up 2,000% today. Cool bean, Preston. Buy AMD puts are going to print tomorrow. AMD, is that Advanced Micro Devices? AMD. Okay, I'm going to say no to AMD, same reason, okay. Here's a big gap up, that will fill eventually. She shoots up, here's the top, now she's coming down. Okay, 30 days ago, we're at 160. Jumped up to 270. That's $110. $110 off of a 160 stock, well, that's a pretty big jump. I don't know the number off the top of my head, but it is what it is. But she's coming down, so what is it that you want to do? That's an interesting question. Okay, let's keep on going on. KG4, Michael Burry is shorting Palantir and NVIDIA. What do you think of that? Number one, I don't like Palantir. Number two, I don't like NVIDIA. I'm strictly a numbers person. Now, people, you hear it online all the time. Palantir, NVIDIA this, NVIDIA that. Yeah, good, fine, wonderful, dandy. Take a look at the numbers. The numbers for NVIDIA, the dividend is 1 penny. Okay, that's 1 penny for the dividend. The book value for NVIDIA is $4.11. Now, that may not mean anything to you, because what's the stock at now? NVIDIA. 198. 198. Okay, here's the high, here's the bottom. Okay, down, up, down, up. Now she's coming down. Okay, well, who figured? But it's a $198 stock. That's the stock price. That's not the value of the company. Because the value of the company is found in the cash flow. It's found in the book value and the assets in which it holds. Well, the assets which it holds and the cash coming in, the book value is $4.11. Now, let me actually just figure this. We'll actually take a good look at it. Go here, NVDA. NVDA. Okay, so we're going to put it into Yahoo Finance and see what Yahoo Finance comes up with. All right. Now, what I want to look at, NVIDIA, is this right here, the statistics. The statistics are going to tell me what the book value is, what's the revenue for this company. So let's go there to statistics. Why can't I do it? There it is right there, statistics. Okay, give me a second. All righty. All right, so here we have the statistics, valuation measures. See that right there? Valuation measures. Annual, quarterly, monthly, blah, 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 blah. All right, so let's go slide all the way down. Okay, do you see this right here? Revenue per share. That means how much money does NVIDIA have coming in revenue as compared to how many shares they have outstanding. Revenue per share is $6.76 per share revenue. That's how much money they have coming in. All right, book value. Just what I said. Book value, $4.11. That's the value of this company. Is what it is. Let me show you a different company. Now, NVIDIA, I know for a fact, is not 100 years old. But this company is over 100 years old. Let me show you the numbers of this company. This one's on my list. NVIDIA isn't. Now, there's a reason why this company's on my list. Revenue per share, $189 per share. We can call it 190 because $189.95. It's $190 revenue per share. NVIDIA's got $16 per share revenue. This has more money coming in per share. Okay, hold on. Let's come down to book value. Book value per share, $71.14. $71.14. It's worth a hell of a lot more than NVIDIA. Why is the stock price so much less? $66.85. The stock value for this company, it's over 100 years old. Okay, the revenue per share is $190 per share in revenue coming in. What's the book value? $71 per share. That's the value of the company, the assets that they own, the revenue coming in, the inventory they own, all the stuff that they own. See, to get the book value, you have to come up with everything the company owns. Real estate, business, desks, tables, staples, trash barrels, everything. Everything the company owns. Book value, right there, $71.14. The company's over 100 years old. The stock is only $66. The dividend is a hell of a lot higher. Where's the dividend? History. Summary right there. The dividend for NVIDIA is 1 penny. The stock's $200, but the dividend is 1 penny. Summary. It's summary, summary. Okay. PE ratio, book value, blah, blah, blah. Book price, enterprise price, right there. All right. The dividend, 60 cents. The dividend for NVIDIA is 1 penny. The stock price is $198. $198 per share. The dividend is 1 penny. The rate of return is 0.02 for the year. Book value is $4.11. Well, look at General Motors. The dividend is 60 cents. 60 cents. The stock price is $66. Or sorry, $68. The book value is 69, 71, I think it was 71 per share. Revenue is $186 per share. In my opinion, by the numbers, General Motors is a lot better of a deal than NVIDIA. because the numbers are just better. Anyway, besides the point. You can manage AI summaries and settings. All right, thank you. Michael, good evening, Michael. Bitu, good evening. Raj, good evening. Tony, why is the stock market crashing today? I'm not 100% sure what you're talking about, Tony, but I didn't see it crash today. Michael Daniels, how are you today? All right, what do we have? Keep on. Mr. Giggles, what's going on, Mr. Giggles? So Gabriel wants to take a look at AGNC. Let's get out of there. AGNC. Now, Gabriel, I'm not 100% sure why you like AGNC. Take a look. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at this. Up, down, up, down, up, down. What's going on here? Lovely. However, I don't like AGNC, and this is the reason why. Now, I used to like it until they got a new market maker. 0, 0, 0, 0. 0, 0, 0, 0. You see that? Those numbers are in the zeros. That means if you do a covered call and you're not 100% right, you're SOL. Because at the money, $10.18, it's going for 21 cents. You take the 18 off of that, you're walking away with 3 cents. Hell no. The 10.50, 1 penny. Hell no. So over here, same thing. 25, you take off the 14 cents that you're losing. I'm walking away with 9 cents. No. The 10.50, 3 cents. Everything else under that, 0. Sorry, dude. The numbers just don't work for AGNC. Not like they used to. Years ago, they used to be better. Michael, CCCX. What the hell is that, Michael? CCCX. One more time, CCCX. All right, it was at 10 for quite a while, shoots up to 28 and drops like rock. 15.15. All right, for the fun of it, let's see how many dividends this thing has actually paid out. Give it a second. Well, it's going to pop up. Here it is, Churchill Capital. See, I have a minor flaw with companies. Dividend, 0. EX dividend date, 0. 1 year estimated target, not even there. It's missing too much stuff, Michael. Terribly sorry. Michael Daniels, IIPR. We're going to stay right here on Yahoo Finance because I have no idea who IIPR is. Let's see what it is. Okay, here it comes. Innovative Industrial Properties, 49 bucks. Oh, look at that. It does have a dividend. 15%. Nice. Well, let's take a gander at it then. Wait a minute. Hold on a minute. Let's go to historical data. So I want to go to historical data to see how many years in a row has this company had its dividends. Raj, Sam. What the hell is Sam? Historical prices. All righty. Come on. It's got nothing to do with me. Look at historical prices and then the time frame. I want to see how many dividends this company has had. Mike Daniels, REIT. Okay, which REIT is it though, Mike? Sure. Okay. Why isn't this opening? It's not working. Okay, IIPR. IIPR. Nope. That was quick, wasn't it? No, I don't do monthlies. November, December, January, April, June. I don't do monthlies. The numbers just don't work. Okay? Just don't work. Okay, Mike Daniels, REIIT. What the hell is that? REIIT. Nothing there, dude. Why? Why what, Michael? Okay, you asked REIIT. We cannot find that symbol. And question is why? Why to what question? What question are you asking me? All right. Should I short? We already talked about that one. James, I wasn't complaining, just expressing okay. Is that seasonality chart also part of Thinkorswim? Yes, Joe, it is. Oh, Michael Daniels is new. He wants to know why I don't do monthlies. Oh, geez. So other than the fact of me saying I don't do monthlies because they just don't work for me. Now, I had to pull that last part in. They don't work for me. So let me explain why. This here is O Realty. It's a monthly. Okay, so let's look at the last 30 days for the fun of it. Today is the 4th, right there. Okay, and look at this one right there. All right, so are you ready, Michael? Here we go. Here is what he wants to take a look at. It's a monthly. It's called O Realty. Everybody loves O Realty for some strange reason. Okay, drops down, back up, back down. Here's a new bottom right there, 56. If I do the 56s, it's going for 57, which is 80 cents per share. Okay, Michael, you following me so far? If I do a covered call on O Realty, current price, 56.14. The closest strike price is going to be the 57.50. It's going for 80 cents per share. Okay, well, let's get the calculator. 80 cents per share. And how much is the stock? 56.75. 56.75. That gives me a grand total of, are you ready, Michael? Okay, a grand total of 1.4% for 1 month. 1.4% for 1 month. So let's multiply that out by 12 because there's 12 months in the year. Grand total of a whopping 16.9%. Now you might think 16.9% is good. I beg to differ. I don't think so. I don't like it. Okay. All right. So now, wait a minute, Michael. I'm not done yet. Not done yet. Hold on. Now, Michael, this right here is 30 days. This is today. Okay. This is last week. This is the week before, and this right here is 30 days ago. 30 days ago. Okay, the stock went down, it went up, it went sideways, it went down, it went up, and then it went down again. It's currently, Michael, it's currently 56.14. Now, if you don't mind, Michael, tell me, where is this going to be in 30 days? Now, I could give you a good idea where it's going to be in 5 days. Okay, now I've been trading for over 30 years. That's a 3 and a 0, 30 years. I could not give you a good idea of where this is going to be in 30 days. I give you a good idea what's going to be in 5 days. Okay, it looks like she should hypothetically hit bottom soon, turn around, go back up, probably around 57, 58 in the next 5 days. That would be my assumption. 30 days? Oh, hell no. So besides the fact it's difficult to figure out where it's going to be in 30 days, 1 month option is only giving me 1.4% for the month. So 1.4% a month, okay, over the year, that's only 17% for the year. Why? If I'm doing weekly and getting 1% every week, that's over 50% per year at 1% a week. This one here is 1.4% and it's still only giving me 17% for the year. I don't like monthlies. The numbers just don't work for me. And this is almost impossible, in my humble opinion, to figure out where it's going to be in 30 days from today. I don't do monthlies. They just don't work. He says, oh, okay. See, weekly options only, Michael. Okay. I got two things I'm looking for: consistency of profitability and weekly options. That's it. I want a company that's consistently profitable, and I want to make sure it has weekly options. That's it. Okay, next. Who do we have next? What we have here. Can you help me make money? I will pay you a percentage. Thank you, Joshua. Is that season I checked? Yes, Joe, it's on Thinkorswim. Okay, Joshua, you really want to have a chat? DM me with your number. I'll give you a buzz. We'll chat. Douglas Brubaker. Oh, Brubaker. I love that movie. That was a good movie. The object of this video is to teach you how to make money. Thank you, David. Good evening, James. What is the time range you purchase a covered call before its expiration? 5 days. Douglas Brubaker. Yeah, I like that. That was an awesome movie. Light bright. Wait a second. Light bright, making things with light. Out of sight, making things with light bright. I remember that commercial. Light bright. It's light bright. What a beautiful sight. All right, where are we? Charlie, how you doing? Bito APA. Isn't that Apache? APA? APA Apache. Here we go. Apache. Okay, so. Double high. Check that out. A double high right there. Bottom. Where was it? Where is it? Look at this. Down, up. Here's the high. Down. Here it is. Back up to the high. Back down. Here we go. Not quite this week for Apache. Now, don't get me wrong. I like Apache. I do. Here's your last 30 days. Right there. Here's your last 30 days. Okay, 30-day high, 30-day bottom. Shoots up, pulls back, new 30-day bottom today. Now, don't get me wrong. I love Apache. I really do. It's on my list. I'm writing it down for next week because this baby's going to find the bottom, hopefully within the next couple of days, turn around and go back up again because that's just what stocks do. Schnitzel breath, VA and NJ just turned blue. I'm not 100% sure what that means, but okay. Is Vail a dividend stock, sir? Hold that thought. Twist pasta. What do you think about doing covered calls on an option as opposed to owning the stock? Now, twist pasta, that's called a poor man's covered call or a calendar spread. I do those all the time. However, I only give away one trading strategy for free, and that's the one I'm currently teaching. Okay, so I know a lot of crap. I do. I could spend hours upon hours sharing all the lovely stuff that I know. But I'm giving you guys one trading strategy that I created for my 9-year-old. Simple, safe, predictable, consistent, no way to lose if you do it right, for a simple, safe 1% per week. That's over 50% per year. Now, I could sit here and show you other trading strategies that are more profitable, but with more profit comes more risk and comes with more time invested, learning curve. So no, I'm not going to do that. I'm giving away one. I'm not trying to sell anyone anything. Okay, I'm creating a video diary, a video dialogue for my children and my grandchildren. So when I'm gone, they'll have something to go back and say, hey, how did Papa take care of this situation? So yeah, they will be required to go through hours upon hours of videos to learn everything in order to get part of their inheritance. They don't know that yet. MSTR, hell no. Twist Pasta, where can you get a synopsis of your freebie guidance? On YouTube. There's 1,200 videos there. They're all free. But let me give it to you really quick. You ready? Here we go. Gotta take a deep breath for this one. All right. What we're doing here is looking for a simple, safe, predictable, consistent 1% per week using nothing but pre-qualified dividend stocks. Those are companies that consistently increase their dividends for at least 2 decades. That means higher and higher and higher profits every year. Now, we take those companies, we throw them into a calendar because calendar tells us exactly when they're going to pay their dividend. When they pay their dividend, the stocks have a tendency to go up. Once you know when the stock has a tendency to go up, you jump in, you grab that stock, you take a small little portion, just 1%, you jump in, you jump out, boom, and then you go to the next one. I think that was pretty much it, wasn't it? All right, so let's keep on going. Bloom symbol is BE. Okay, BE. Bloom Energy, there we go. Hell no. Wasn't that quick? Look at this. This the high was yesterday. It was $40 back in July. $40 in July, and then she jumps up to $150. Goes from $40 to $150. Well, what do you think? Of course it's coming back down now. People will only take profits to a certain position. And once they get so high, it's just like begging for taking profits. Okay? Profit taking. Profit taking. Profit taking. Profit taking. That's what they do. They go up, they go down, they go up, they go down. That's basically it. Okay, Bit2Where looked at that. That was a perfect explanation. Thank you. You're welcome, Douglas. Very interesting. New to trading. Sheila, good evening. Ooh, sweet little Sheila, you know her if you see her. Blue eyes and a ponytail. Her cheeks are rosy. She looks a little nosy. Man, the little... Sheila, has anybody ever sang that to you? Sweet little Sheila whispers in my ear. Oh, 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 love you, Sheila, dear. Anyway, yeah, I'm actually that old. Nice going. Okay, so we got one questions over there, questions over here. What do we have? Schnitzelburger, thank you for that. Natasha, how are you doing this evening? Somebody wants to take a look at Wally World. Well, let's take a look at Wally World. WMT. Wally World. Ooh, look at that. Right there. That looks awesome. We're going to get to that. Hold on. Here's the high. Here's the low. Here's where it was. Here's where it is. Look, it's up, down, up, down. What's going on there? Here's the high. Drops. Now she's turning around. Remember what I told you. Stocks have a tendency to go up until they're done. Then they come down. Profit taking. Once they find a new bottom, they turn around, go back up again. Let's zoom into that and show you exactly what I'm talking about. Here's the high. Here's the lows. Okay, here's where it was. Here's where it is. Look at this. Up, down. Here's the bottom. Shoots up. 30-day high. Back down. Tying that new bottom right there. 2 days up. 1, 2. You know what that means? This is a perfect setup for tomorrow. Why? Well, we all know who Walmart is. She jumps up. There's the high of the year right there. 109. Profit taking. She drops $10. $10 on $109 stock. That's about almost 9.5%, something like that, almost 10% drop. Here's the bottom here on Friday. Monday was higher. Today was higher. Tomorrow, if tomorrow's above 102, I would be jumping in. But let's take a look. 102. The 102 is going for 115 for this week. 3 days, still getting 102. Awesome. Well, let's check it out. Let's check it out. You are super funny. Thank you, Twist Pizza. Bito, Hog is best for weekly covered call. Okay, Bito, I'm going to agree with you. I love Harley Davidson. I do. Post 40, up 5,000% trading GRLT this year. Over the counter. Okay, Post 40, thank you for that. Okay, you do realize You're just like everybody else who makes a lot of money in the OTC, sharing with us your successes. Well, what about all the ones you didn't do? Now, don't get me wrong, OTC is a good place to venture on if you have some extra money you just want to throw away, because that's what the OTC is for new companies just starting out. Most of them never make it. And I'm glad you got 5,000% trading OTC. Great. How many other stocks did you do that you didn't do well in? I call them lotto tickets. Yeah, okay, I hear you. I did that many times in my past life also. When I say my past life, when I was younger. Okay, at this point in my life, I don't have the privilege of making mistakes. Okay, so if I'm wrong, okay, I have to go back to work and I have no desire to do that. Roger, what are you doing? Didn't complete the Go Popular mission. You can let them know they can get daily bonus points after completing all daily missions. I have no idea what that means. All right, Roger, thank you. All right, so I like Wally World. How do you do this, man? Jake, sit back, relax. You're relatively new here. Everything will be explained as we progress forward, so sit tight. Looking for guidance? Great, Raj. I'm here every night, 9 p.m. until 11. Okay, ask whatever questions you need. 280 weekly cash flow. Okay, I don't know if that's good or bad, but all right. I'll go back to here. Hold on. Okay, we're looking at Walmart right now. What time zone are you in? I'm in Eastern Standard. So I'm in Florida. So I'm actually on the Gulf. I'm just gonna call it the Gulf. I don't want to step on anybody's toes. Gulf of Mexico, Gulf of America. All right. Considering somebody brought it up, here we go. Gulf of Mexico, Gulf of America. Depends on how you look at it. If you are an alien coming from another world and you see a body of water next to North America, Central America, and South America, what are you going to call it? Okay, you're calling it Gulf of Mexico because you were born and raised and told that. But if you are an alien coming from another world and you see North America, Central America, and South America, why the hell would you not call that the Gulf of America? Just makes sense. Don't give me a hard time because, I see it from both different directions and I really honestly don't care what you call it. Okay? Bito, we looked at APA already. All right? So let's continue looking at Walmart because everybody knows who Walmart is. So let's take a gander. The high, the low, look at this. Right there, 102. The 102s are going for 115. Let's do one on Wally World. We all love Wally World. Well, I think everybody likes Wally World. Let's change this right there. And the 102 right there. One contract. La, 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 la. There it is. Market. Here's Johnny. Wait. Click and send. There we go. Buy one covered call Wally World. 7 November. That's this coming Friday. The 102 call option. Well, look at the stock is at 101.90. 101.90. You can't get any. Well, you can get closer. You can get 101.98, but it's at 101.90. Okay, so we're going to sell it at 102. Here's my profit, 127. Cost of trade, including commissions, 10 G's. Well, let's see what that is. Okay, now I'm going to give you an example in a second, and it might make things a little easier. Okay? Thank you, Douglas. Douglas agrees with me. Because, Douglas, you and I agree. But think of it this way. I don't want to say anything because some people are just crazy, for lack of better words. Okay, and I definitely, I keep my political opinions to myself because I just don't want to deal with crazy people. Unless, of course, you have a shirt on or something on that, I agree with. Then I'll talk with you. Other than that, I just don't talk to anybody. It's safer that way. All right, so maximum profit, 127. Cost of the trade, including commissions and fees. Let's look at it this way. What I am doing for me, I'm creating what I call weekly cash producing assets, which means I'll take a chunk of money and I'll put it into an asset. We're going to call it Wally World. It's my asset, Wally World. 10 G's. Okay, now this 10 G's is going to give me this week $127. Well, let's do the math, see how much that is. Think of it as a vending machine. So I'm paying 10 grand for a vending machine, and this week the vending machine is giving me $127. What rate of return is that? Okay, clear that. Profit first, 127.50, and we divide it by the investment, 10,073, grand total of 1.26%. That's 1.25. What are your predictions for the S&P 500? Michael, I don't do that. Okay, Michael, if I showed you what the return is for the S&P, SPX, or the SPY, you probably wouldn't do that either. And I don't have any predictions because I really honestly don't care. Isn't that weird, Michael? I don't care what the S&P 500 does. My major concern is the company profitable? Because over the last 100 years, what have we seen? World War I, World War II, Korea, Vietnam, the Gulf, Iraq, Iran, Afghanistan, all that crap. What else? Oh, hold on. So glad you asked. We've seen the, what do you call it? The Dust Bowl of the 30s, the 20s, 30s, and 40s. The Dust Bowl. I don't know if any of you guys remember that. We've seen the Great Depression. We've seen the stock market crash of 29, 87. Now, the only reason I'm skipping from 29, because that one everybody knows, I'm skipping from 29 to 87, because I don't know the other crashes that were there. Now, from 87, I remember that one, because I actually lived it. 87, 2000, 2008, 2021, 2025. We've seen all this crap over the last 100 years. There's probably a lot more, too. I don't know if you remember the oil embargo. Do you remember that? People waited in line for hours just to get gasoline. Okay, so fine. Great. Now, with that said, there are companies that are over 100 years old that are still, to this day, consistently profitable and consistently increasing their profits and sharing them with the investors. That's us. We are the investors. So if the company's profitable, they give us more and more money. It's called a portion of the company's profits. If you did not know, the stock market that we know of as of today was created in the late 1500s, 1580s, 1590s, so on and so forth. A bunch of businessmen got together and say, hey, let's create the biggest, baddest company the world has ever seen. So what they did, they went door to door. Have I got a deal for you? Invest in our company and we will share our profits. That's basically what they said. Invest in our company and we will share our profits with you. That was in 1602, the very first dividend stock sold that I know of. Okay, correct me if I'm wrong if you like. That was the Dutch East India Shipping Company. They ran for 198 years. They averaged 18% annual returns. 198 years at 18% per year. All the stocks that we're looking at nowadays are based on that guideline. Okay, invest your money into a company, you share the profits. Well, we look every week. Every week we look to see how many companies there are. This week, 10,000, I think 370, weird number, 10,570, something like that. But that's a lot of companies to look at. So why am I only looking at 3% of them? Because my thoughts, Apple V, sit tight for a second. My thoughts are consistency of profitability and weekly options. So out of those 10,570 different companies, only about 300 fit what I'm looking for. Consistently profitable and weekly options. Now, when I say consistently profitable, I like 20 years. 20 years of consistent profitability. That's what I want. Okay, Apple V. I am thinking of taking long-term position in it as it's a multi-year low. Okay, Now, Appleby, let me share a little bit of tidbit with you on Comcast. They were incorporated in 1964, I believe. I believe at this moment in time, they have like 65, 66 million customers paying them every single month. So unless there's something else that comes out that's going to knock Comcast off, I'd say you're pretty much okay with that one. But it's not advice. But we will take a look at Comcast in a little bit. Just hold tight for a second. All right. Shall we? Let's save Wally World. Okay, 1.2. Why not? We are going to save Wally World. What was it? 1.3. Okay, 1.3, and there we go. Give it a second. There it is right there, and we go like this. And there it is right there. And here it is right there. Wally World. Right there. Come on. Whoops. And here we have it. Wally World. Yay. Okay, so buy one covered call Walmart. 7 November, which is this coming Friday, the 102. Look at the strike price. Oh, can't read it. Profit 137. Investment 10 grand. And the rate of return is 1.25 per week. 1.25% per week. Okay, that's over 50% per year if you can get 1% every week out of Walmart. If you like Walmart. All right. $1.25%. And there you have it. Oh, come on. And back to where we started again. There it is, right there. Cool beans. So I like Wally World. I do, especially when it's in a nice upward trend such as that it is. Let's get rid of this. Let's get rid of this. Get rid of that. Let's go back to where we are right here. And what do we have here? Okay, Appleby, great dividend. Just worried about them losing subscribers. And Ziply has been eating their lunch. I have no idea who Ziply is. And Appleby, if you have a concern about Ziply taking over Comcast, well, I have no idea who Ziply is. Honestly, I don't. So let's take a look at Comcast, CMCSA. CMCSA. Oh, yeah, that would make me a little nervous also. Okay, here's the high, here's the low, here's where it was, here's where it is. Look at this, down, sideways, down. Now she's bumping up. 27.44, the 27.50s are going for 40. Oh, hell yeah. Well, let's take a look at it. Okay, the last 30 days. Oh, definitely, yes. Take a look at this. 30 days ago, there's your high. Here's your 30-day bottom. Down. Now she's going up. Here's your 1 day. Here's your 2 day. Here's your 3 days. 3 days to the upside. Currently, we're sitting at 32.49. Closest you could 27.44. Sorry. 27.44. The closest one's going to be 27.50, and that's paying 40 cents a share for 3 days. So let's see what Comcast looks. Comcast is a new broadband company, which is Comcast's bread and butter. All right, thank you for that. So let's get rid of this. Let's do another one of those covered calls on Comcast at 27.50, right there. Now, we're just going to do one so you can understand the differences of what one looks like. And then you can decide, can you do 1, 7, 10, 15, 133? Okay, so here we go. Buy one covered call of Comcast, 7 November, 27.50, Comcast at the market, 44 is the profit, 2,700 is the investment. Okay, calculator. 44 is the profit divided by the investment. $2,706 gives me a grand total of 1.62. 1.62 for Comcast. Hold on, I forgot to write Wally World down. $1.25, and then Comcast CMCSA 1.6. All right. All right, 1.6. Comcast, there we go, and there we go, and there we go. Give it a second, it's gonna show up. There it is. There we go. And there it is. Comcast, yay! 44 is the, whoops. 44 is the profit, 2,700 is the investment. Buy one covered call Comcast, 7 November, the 2750s. Those are the numbers. So let's go get rid of this. Okay. And we said, how much was it? 1.62. 1.62%. Okay. And there we go. All right, that's it for stocks for today. Well, how many did we get? 1, 2, 3, 4, 5. Cool beans. Yeah, right, just leave it there. There we go. All right. All right, we already did Apache. How far out of the money do you sell your covered calls? I sell them at the money, sometimes in the money, all depending on the rate of return and which way is the stock currently going, because the stocks are going in whatever direction they're going in, not that we have a lot of control over that. All right, hold on, where are we? And right there. Okay, so check out TMQ. I have a call on 4 and 6. Jeremy, what is TMQ? TMQ. Trilogy Metals. Hell no. Sorry, dude. Just hell no. All right, that's good. Oh, low battery. Ooh, that's not a good thing. Well, it doesn't really matter. Not a whole heck of a lot of people over here. All right, charging. Okay. All right. So let's go over to here. What do we have here? What we have. All right, there's Wally World right there. Bud Lizzie, what's going on? Joshua Carr, how are you today? O-Dog, how you doing, O-Dog? I think so. How you doing? MZ Christile. Okay, how are you doing? Okay, let's keep on keeping on. What do you got? Paul, how you doing? Paul Mendez. Paul's present ready for dividends talk. Hey, Paul, thank you for that. Slow Easy 29. How are you doing today? Perps DeFi. Interesting. Thoughts on Apache? We already did that one. Steve wants to take a look at SHW. Is that Schwab? SCHW? It is. 93.84. Okay. 93.84. Got a minor problem with that. Okay, here's your high, here's your low, here's where it was, here's where it is. Up, down, sideways, 93.84. Looking at the 94s, 86, hell no. Next week's, yep, that'll work. Next week, not this week, but next week. Steve, let's check it out. Alrighty, a year ago, Schwab's at 70.99. Let's call it 71, shall we? The bottom of the year was in the beginning of April, 65.57. That's this thing right here. Look at this. Right there. There's the bottom. Then she goes from 65 up to 100. It's a $35 increase, which is more than a 50% increase. From here, 65 to 100, that's $35. That's more than 50%. So yeah, it's going to pull back. Last 30 days, no real rhyme or reason. Here's your high, here's your low, down, up, down. Sorry, dude. Just doesn't look right. Not for me anyway. If you like it, hey, more power to you. The empty space. What if the stock goes, does while you're holding the sold call? That makes no sense at all, dude. You're missing a couple words in that sentence. Why does it matter they have a dividend given that your strategy is on premiums from selling calls? Oh, twist pasta, right? Twist pasta. Let's check this out for a second because you're going to love this. Are you ready? Twist pasta wants to take a look at this. Okay, hold that thought. There we go. All right, twist pasta, you ready? Why? The question is, why am I concerned about dividends if I'm only collecting the premiums? Here's the reason. Two different kinds of companies. That's it, only two. One will share their profits with a dividend, a portion of the company's profit giving back to the investors, and that's you and me. We are the investors. We buy, we sell, we become investors. Okay? The second company, they take all their profits and they put it back into the company, and the company stock goes up. No cash flow at all. Just a slight promise of potential growth. That's it. Promise of potential growth. So the reason I like dividend stocks, number one, they're boring as hell. They're predictable. They do the same thing year after year. They're consistent. It means they're consistently profitable. And what I like best is they're consistent, they're predictable, and they're profitable. That's what I like about them. Okay, so let's take a look. What we're looking at here, pasta, is called an EX dividend. Whatever. EX dividend calendar. That's what it is. Okay. November 2025. Today is the 4th, which is right here. Each one of these little teeny green dots represents a company that is paying a dividend. Now, we already know there's 5,500 different companies paying a dividend every year. Now, most companies pay 4 times a year, once per quarter. January, February, March, first quarter. April, May, June, second quarter. July, August, September, third quarter. October, November, December, fourth quarter. Here's the interesting thing, pasta. You ready? The first week of the first quarter looks exactly the same as the first week of the second quarter, the first week of the third quarter, and the first week of the fourth quarter. So if each stock pays a dividend every 90 days, and each stock has a tendency to go up in value just before the EX date. Now I'm going to explain that in a second. That, knowing when the stock is going to move based on historical performance, because they do the same thing year after year after year, or every 90 days. So just knowing when the stock is going to move is only half the battle. But that does put that part in my favor. It means I know when the stock is going to move, or have a good idea, because they pay a dividend, and right before the dividend, the stock has a tendency to go up. That's one reason. Okay. Reason number 2, stocks go up, stocks go down. That's it. Now, all stocks drop. So if you had a dividend stock and you had a growth stock, let's say they both dropped. Okay, the growth stock, you're not getting anything if the stock drops. Now, a dividend stock, if the stock drops, guess what? You're still getting a dividend, and you're getting a dividend that increases year after year after year. So you have to decide, what is it that you're looking for? Okay, you're here for a reason. What is that? Well, you know what my reason is. Simple, safe, predictable, consistent, 1% per week. Now, I'm not trying to sell you anything. What I'm trying to explain is, for me, at my age, okay, I could go to work if I wanted to. Now, my first job was in 1974 in Old Man Simmons Farms, and I retired 2 years ago, which means that's 5 decades of working. Can I keep working? Yeah, I could. But now I'm working doing what I want to do. Okay, I'm starting a new company. Okay, some of you might know it. Some of you might be involved in it. Some of you might want to get involved in it, whatever. But that's besides the point. Okay, I have worked plenty over my life. The amount of money I've accumulated over my working life has to last me until the day I die. Okay, and I'd like to leave something for my kids too. That's one of the reasons why I'm doing this video, because the knowledge I have accumulated over all these years, I want to pass it on. And what you guys are seeing is just one strategy, just one. I have a whole bunch, and I do have other videos that go in deeper into other things, but not here. Here it's free. You don't have to pay for anything. All you just ask a question, I'll give you the answer. That's it. Simple. It's also creating a legacy for my children and my grandchildren. Okay? So the reason why I do dividend stocks, because they're predictable, they're safe, they're consistently doing the same things over and over and over again. It makes making money so much easier. Just knowing when the stock is going to move is half the battle. So when it comes to dividend stocks, 4 dates you got to remember. Date number 1 is called the announcement date. Okay, that's date number 1 right here. See, announcement date. Now, the announcement date, basically, they're just going to say something similar to this. Hey, everybody, this is James from Dividend Stock Talk. We made so much money this year. You're going to be awesome. You're going to be so thrilled. It's wonderful. And you're going to get this much money, and this is when you're going to get it. All they're doing is just telling you what they made for the year and how you're going to get your share. That's number 1. That's the announcement date. Not really that important, but it gives you an idea of what's going on. Date number 2 is the important date. That is called the EX dividend date. The EX dividend date is the last day the stock trades before the dividend is paid. So if you want to collect the dividend, you buy it before the EX date. Date number 3 is called the date of record. Whoever owns the stock on the date of record is entitled to the dividend. Date number 4, trivial, but still important, payment date. That's when you're going to get your money. So here's the thing. Think about it this way. All these companies, there's 47 here, 51 here, 98 here, 42 here, 69 there, 46 here, 45 here, nothing here. That's Thanksgiving. Nothing. So all these companies, each one of these little dots represents a company that is profitable and sharing their profits. That's why I like dividend stocks, because they're consistent, they're predictable, and they're easy to jump in, jump out, and they increase their profits year after year after year. And that's what I'm looking for. I'm looking for profits. Well, I hope that's not true. Let's keep on keeping on. Okay? So, next. What do we have next? Alrighty. Oh, RB21 wants to take a look at Ford. Well, before we do that, let's get out of this. Go over to there, and let's take a look at Ford. Here we go. Well, now, Ford, I did have a couple of weeks ago. I got rid of it only because here's your bottom right there. Okay, and just profit taking. For the last couple of weeks, it's been profit taking. So, yeah, I'm not going to do Ford until it gets probably back down in this area down here, the 11, 12 area. Nico, James, did you put all those companies in your calendar? No, Nico. All these companies here, that's preset. That's every single company paying a dividend. I don't do all of these. Hell no. Mine looks more like that right there. Okay, what do we have? Fast Turnal, PPG, IBM, Granger, K-View, Target, West, CHD. What's CHD? I forget what CHD is. Sherwin-Williams, CTAS, Smuckers, 3M, ExxonMobil, Nextera, Consolidated Edison, Aflac, Lennar, Johnson & Johnson, McDonald's, Coca-Cola, Stanley Black & Decker. Okay, those are companies that I like. You've probably heard of all those. Let's get back out of here. What do I think of Altria as far as its dividends? Okay, C-Tails, I love Altria. I do. We looked at it a little earlier. What's happening with your eye? Okay, work brings freedom. I got stuck with a nail in my eye, so I don't see out of this eye. So every once in a while, you'll see it droop. You'll see it do whatever it wants to do. That's what's happening with my eye. Thank you for bringing that up. It makes me feel better. Okay, yeah, thank you. Where are we? Why do you prefer black and red candles? I don't. Those are green and red. 50% live has been met. Twist Pasta, if you're selling in the money, how do you manage getting assigned the obligation to sell a stock? I don't care. See, Twisted Pasta, what you're missing. All right. Big Dog, give us your top 3 dividend stocks. Hold tight, Big Dog. Okay, Twist Pasta. Okay, let me see if I can explain it to you in a different manner. Well, which one did we pick? Wally World. Let's pick Wally World. WMT. Whoops. WMT. Okay, so here's Wally World right there. Okay, Pasta, you ready for this? The current price is 102.27. If I do the 102s, I'm bringing in $1.81. Follow me so far? Okay. So if I buy it at 102.27, I sell it at 102, I lose 27 cents, right? You following me so far? Buying at 102.27, I sell it at 102, I lose 27 cents, but I'm collecting $1.81. So if I take the $1.81, add it to 102, I'm walking away with 103.81. Sit tight. So 103.81, that is the strike price, 102, plus the premium that I'm collecting, 181. It comes to 103.81. Now, what am I paying for the stock? I'm paying 102.27. So what am I walking away with? All right, I'm going to subtract 102.27. And that's going to equal $1.54. Now, Pasta, $1.54 is my profit. Even though I sold the stock for less than I paid for it, I'm still walking away with $1.54. Okay? Now, what rate of return is $1.54 on a $102 stock? Well, that's easy. You take that profit right there and you divide it by that price right there. Divide 102.27. That gives me a grand total of 1.5% for 1 week. Not even 1 week, for 3 days. Because the trade that I'm looking at is Walmart, 102.27. I'm buying at 102.27. I'm selling the 102s, picking up 181. That's 1.5% for 1 week. My goal is 1% a week. Well, 1.5%, that's more than 1% a week. See, what you're looking for is different than what I'm looking for. I'm looking for simple, safe, predictable, consistent 1% a week. Do I want to hold the stock? Hell no. I just want a good company to hook my pony to. So I hooked my pony to Walmart for this week. Great. What am I going to do next week? Well, next week it might be Home Depot. It might be Bank of America. It might be Wells Fargo. It might be Procter & Gamble. I don't know. All I know is that this week, Walmart is giving me 1.5%. And that works for me. Big Dog wants top 3 stocks. My top 3 stocks, Macy's, Kohl's, Nordstrom's. That would be my top 3 for this year so far. La 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 la. Miss Christie, thank you for that rose. That was nice of you. All righty, what do we have here? Miss Christie, thank you. Paul Conrad wants to take a look at Harley Davidson, HOG. Ooh, big drop for Harley today. Okay. What else do we have over here? You got that Big Dog. Now, Big Dog, that's my 3 favorites for this year. Not a tip, not advice. I don't give tips. I don't give advice. I just make observations. All right, so here is Harley Davidson. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at this. Up, down, up, down. Well, that don't look that good, does it? The last 30 days, high, low, down, up, down. We're at 25.36. Now, I already own some Harley Davidson. Okay, so not really looking to get in any more. But I was not expecting this today. Friday was the bottom. Monday was higher. Today is a total surprise. But guess what? Harley Davidson, over 100 years old. It's an American icon. They're not going anywhere at any time soon. That being said, what is rolling your strike down? Uh-oh. Temporary, don't really want to go into that at the moment. But I could basically give you an idea. Rolling a strike price. All right. All right. Timper, you ready for this? Here's the order right here for rolling an order. Okay, so basically I do a lot of covered calls. When I buy a stock, I sell an option. Now I can take that option and I can push it into another week. Like from this week, I can push it into next week. They call that rolling forward. So what happens when you roll forward? You have to buy back the current one. Okay, 14 November, that's next Friday. The 14.50. So I'm going to roll it into the 21st of November, which is 1 week out. Now the market maker is only offering me 7 cents a share. That's not 1%, because 1% of 14.50 is 14.50. Now rolling down, well, the current price is 14.50. Rolling down would be going to 14, which is right there. And that, by rolling down, it gives me a higher rate of return or a higher premium. But when you roll down, you get a higher premium, but you're losing 50 cents on the stock price. Or $1 or $5, depending on how far down you roll it. And then I push it out. So I roll it down 50 cents, and I push it out an extra week, and I'm getting 33 cents a share. But I'm not going to do that because I don't want to. All right, next question. All right, the empty space. Thank you for that. Making a difference. Bloom Energy. We already looked at Bloom Energy earlier. Making a difference, okay? Oh, Making a Difference wants to take a look at Boeing. I actually have some Boeing. Down today. All right. The high, the low. Where was it? Where is it? Look at this. Up, down. Up, down. Not that great of a position, but look at this. We were looking at this one today hoping it would be higher. Right there. Friday was the bottom. Monday was higher. Today, not so much. So now we have to come up with a new bottom for Boeing. Uh-oh, New Jersey 78 wants to take a look at University of New Hampshire. UNH. It's actually United Health Group, but yeah. I'm going to say no to this one. And here's your high. Wow. Dropping, dropping, dropping. Wait for it to stop dropping before you jump into it. Pac-Man! Just join. Don't know if you talk of Meta. Why the hell would I talk of Meta? Hold on. You're new here. So let's take a look at Meta. M-E-T-A. Okay, we're going to put in Meta. Hold on. It's going to pop up. Here we go. Here we go, yo. Here we go. All right, there it is right there. Okay, I want to look at dividends only. Come on. It's not working today. Damn it. Having issues. Okay, so who's asking about Meta? Someone is. Okay, just joined. Okay, Meta it's not giving me the information I'm looking for. Refresh. There is no refreshing that. Pac-Man. Okay, so the reason I don't like Meta, it's not giving me opportunity here to show you why. Come on. Come on, buffering, buffering, buffering. Damn it. All right. Needless to say, Pac-Man, Meta or Facebook or whatever you want to call it only has 2 years of dividends. It's been down much. Okay, so here we go right here. Okay. Dividends only. All right, dividends only. There we go. And I want to do this over here. All the dividends. Are you ready? Very first dividend was February 21st, 2024. Now, we all know that Meta has been around for a while, but there's only 2 years of dividends. 2 years of dividends. That's it. I want 2 decades. 2 decades means 20 years. So come back to me in 18 years and I'll have a discussion about Meta with you. Other than that, no thank you. It's been down too much these past days. Yeah, I get that. I still don't like it. Fab, we already talked about PLTR and NVIDIA. PLTR has no dividends. NVIDIA has a 1 penny dividend, and the numbers are just horrible. Bodo Glimt. Novo, NVO. NVO. Novardisk. Yeah, I got this one, and it's not. Okay, you only like dividend stocks? Yeah, Pac-Man, why not? Okay, Pac-Man, look at it this way. If the stock drops, what are you collecting if it's not a dividend stock? You're collecting nothing if the stock drops. A dividend stock, even if the stock drops, you're still getting a higher and higher dividend. I just like the worst case scenario of being paid. That's all. All right, so Novardisk, here we go. Here's the high, here's the low, here's where it was, here's where it is. Look at this. Up, down, up, down, up, down, up, down. We are here, not quite the low of the year, but still pretty damn low. Here's your last 30 days. Okay? Down. That's it. 48.25. The 48.50s are going for $2 for this week. That's a nice rate of return if you like it. But it's still dropping, 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 dropping. I wouldn't jump into it until it actually stopped dropping. Bodo Glimt. NOV, November 21, 50s. All right, you have fun with that. What do I think of PSEC? PSEC. Okay, who came up with that one? Joel. November, December, January, February, May. Yeah. I don't do monthlies. They just don't work. Okay, thank you for sharing. What would be your top stocks for dividends? Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and then whatever's on Warren Buffett's list. That right there, Pac-Man, is about 300 different companies. To Flavorita, do you go live on Monday morning? Yes, I do. Okay, let's keep on going. What do we got? Shane, how are you doing today? Al, stock analysis, ask about tickers. Thank you there, Al. Big and Black, follow the live creator. Thank you there. Lashandra, how are you doing? Tom, what's the company? It's off screen. Oh, this company right here, PSEC? I have no idea. Prospect Cap Corporation. Get rid of that. Get my little chair so I can sit and hang out with you guys, answer some questions before the night's over. Which company was that? Looks like General Motors. Yes, it was. I'm thinking General Motors. Yes, it was. Bye, Hawkins. How are you doing today? Ugh. Jeff, it was General Motors. Boy Hawkins, he didn't do his research. I have no idea what that means. Tim Anderson, WorldCom. What's the ticker symbol for WorldCom? I have no idea. Johnny Boy, how does Procter & Gamble look this week? Not good, Johnny Boy. Check this out. Okay, bottom, up, down. It's in a downward turn. But right here, if you like Procter & Gamble, keep your eye on it. The next couple of days, it should find a new bottom. Johnny P, BTC. I'm pretty sure BTC means Bitcoin. Okay, Johnny P, that means no. How do you like Lyft? I don't. The reason why I don't like Lyft is because it's not even 20 years old yet. Okay. Mike in Love wants Kroger. KR. Kroger. Maybe. Take a gander, Mike. There's the high. There's the low. Look at this. Up, down, up, down. What's going on right there, Mike? Today. What happened today and last couple of weeks? Okay, you guys, that phone's going to die in a couple of seconds. We're just about done anyway, so it's not that big a deal. Here we go. Mikey, check this out. The bottom was yesterday, which means today is one day to the upside. I'm going to write Kroger down because with one day, we could have two. Kroger. Okay. Next, what do we have? We got like 5 minutes left. What else do we have? JMF, how you doing? C-Tails, how are you? Stock trading analysis, discuss monthly options. Al, not quite sure which one you want me to take a look at, but there's a whole bunch of them. Tom Toll, how are you? James Simmons, how are you? Amanda, how are you? Andrea, we already did Mosaic earlier. Sorry. Cooper, is it cooked? Is it cooked to hold Ethereum? Yeah. 1.5% premium on a 2 delta is my goal at this point. All right, Jarf, good for you. Digital Ascension Group, how are you doing? SB 1981, hello. Ms. Christie, how are you doing? Thank you. What do we think about Kimberly Clark? KMB. Oh, wow. Look at that. I'm putting Kimberly Clark on my list for next week. Okay, user 1634. Thank you for that. Now, I'm going to tell you why KMB. KMB. Kimberly Clark, KMB, is a dividend king, over 100 years old and consistently increasing their profits for 5 decades. Okay, so they have a gap down. Big deal. That's the best time to jump in. Because here's the thing about a good quality company. You're going to make most of your money buying low and selling high. Guess what? You ain't going to get any lower than the low of the year, and that is today. Now, I'm not saying buy it today because I never buy at the low. I look for 2 days to the upside, and then on the third day I will jump in. So yeah, I'm going to keep my eye on Kimberly Clark. Thank you. We already looked at Procter and Gamble a little while ago. Dividend stocks, 1% weekly. Ask about stocks. Okay. RB21. What if it expires and the price goes down? You got to give me an example. Does the price go down before it expires, and does it expire in the money, at the money, or out of the money? Sprite McKinley says hi. How you doing, McKinney? Weekly cash assets. Ask about profitable companies. Okay, I have no idea that first 5. Okay. All right. So, do you have that for every month? I have that for every week. Crazy Rush. Thank you for that, Crazy Rush. Digital Marketing Guide. I did take a trade today on Kohl's with 3 days left. 1650 November 7 expires or 45. We haven't looked at Kohl's today. Interesting. Interesting. Okay, so your last 30 days looks something like this. Okay, she drops, finds the bottom, shoots up, pulls back. Now she's going up. Now she's pulling back again. So it looks like she's just going sideways, staying within that line right there, if you like it. So you want the 1650s for November 7, expiring at 45. Okay, that kind of makes sense. Hello, James. Can you look at DOC? What the hell is DOC? Health Peak Patties in KK. What? No. Sorry, dude. Who? Oh, S Nike? I don't do monthlies. Those are monthlies. I don't do those. The numbers just don't work. Sorry. Crazy Rush. Thank you for that. Okay. Kate. Good evening, this Kate. Money and Goddess. Oh. How do you choose the stocks? Simple. You ready, Money? Money Goddess? Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, anything on Warren Buffett's list. All righty, Money Goddess? I don't know if you answered this last night. How far would you dollar cost average a stock moving the wrong direction? I said a dollar amount, which means I don't want to put more than $50,000 into anything that's going the wrong direction. I stop at 50,000. GNPX. I bought pre-split, never heard of it. Gordon Ray, what's up? Make the adjustment. Can you do a video on how to manage iron condors and credit spreads? 1 day to expire. Yeah, no. I could, but I'm not going to. 3 days to the upside to buy stocks or covered call. 2 days the upside. On the third day, I will jump in, covered call. What happened today? On the bright side, I opened a new position in NVIDIA. What the hell did you do that for? James, where do you teach your options? Where do you teach your options way? Right here? I used to be addicted to soap. All right, Swami. Do you put that in some KMB, Kimberly Clark, Sunrun, Nike, Coke. All right, let's keep on going. Kate, Dividend Kings, thank you. Kate, thank you. Couldn't tag you the whole thing, but I just recommended it. Okay. DJT is old, thank you. How do you like ARR? Nope. ARR has not been around long enough. PH, that's Parker Hannafin. PH. Parker Hannafin, another Dividend King. Unfortunately, it's a monthly, and I don't do monthlies. Who came up with that? Jeff? Ooh. Dina. Dina wants to take a look at Intel. Which trading platform do you prefer? I prefer Thinkorswim, which is through Charles Schwab. Where are you reading all these comments from? Hey, Pasta? Okay, you think that you're the only one here? No. I got 9 different platforms. So you're on one. The other ones, I got 7 cameras going at the moment. Believe it or not, I got 2 more cameras. They're not active yet, but we're looking to broadcast on different stations. Yes, I know you're on TikTok. On TikTok number 2. You're not on TikTok number 1, you're on TikTok number 2. So there's 2 on TikTok, 3 on YouTube, 1 on Instagram, 1 on Twitter, 1 on Zoom, 1 on Rumble, 1 on Twitch, and 1 on LinkedIn. That's all of them. A screen weight in tech. Why? Okay. GM is garbage. So is NVIDIA. Different kind of garbage. Thanks, Jack. Please install OBS Studio and mirror your video casts of the next cast. It's free software, and I appreciate your content. Okay, Sci6. I don't know if you pronounce that right. I am using OBS. And you are on YouTube number 2. So YouTube number 1 is just the screen by itself. You're on YouTube channel number 2, which unfortunately is on the phone. Okay, the iPhone. And there's no way of mirroring the image on the iPhone that I know of. How do you know, or how do I know which strike price to choose? Mr. Bell, how are you today? Hold that thought for a second, Mr. Bell. INTC, somebody asked about Intel. Big drop on Intel today. That makes me happy only because it saves me. Wait a minute. I don't know. Anyway. Okay, so here's the high. Look at the big drop on Intel. All right. Not something I want to jump in at the moment, but I'd like to wait. So, Mr. Bell, how do you choose the strike price? Mr. Bell, do you see this right here? $37.03. If I buy it at $37.03, my strike price is going to be 37. 37. Whatever I buy it for, I want the closest strike price, 37. And the week, well, this week the 37 is going for 92, which is a little bit less than 3% for this week. Okay. Next week, way over 4%, maybe even closer to 5%. Don't know. But that's how I figure out the strike price. Thoughts on cash secured put? Superlative. I use them. Less risk in a cash secured put. Not necessarily so. Superlative. Let's take a look at Intel. Intel's at 37. Okay? The strike price for the 37 at the money is paying 92. Okay? Cash secured put is paying 84. See? Strike price for the call is better than the strike price for the put. So in this instance, the covered call would be more profitable than the cash secured put. Sorry. It's always going to be a numbers game. Next week, 137, 145. What do you think? 137, 145. 145 is higher. That's the covered call. Sometimes the cash secured put is more profitable. Not always. Hercules, we already did. Harley Davidson. My more yummy. I have no idea. Man. You can't read all the comments from all streams. Sure I can. It's just going to take me a while. Thank you, Mr. Bell. Beckett. Thank you there, Beckett. Okay, Ran Hood. Hood. Now, I'm going to say no to Hood right now only because for two reasons. Number one, look at where it is. That's number one. Number two, Robin Hood's not 20 years old. Terribly sorry. Nico, James, on calendar, what category should be checked off to show the calendar? Nico, right over here. Okay, hold on a second, Nico. You ready? Here's your vertical line. That separates this side from this side. Okay? Up at the very top, you got monitor, trade, analyze, scan, market watch. Click on market watch. All right. Quotes, alerts, visualize, financing rates, calendar. Right there underneath market watch is the calendar. That's it. It's past 11 o'clock. I'm done. You guys have a great night, and we'll see you all again tomorrow. Why? Because the sun will come out tomorrow, wipe away the cobwebs and the sorrow, till there's none. Just thinking about tomorrow. Okay, DASM code, ODTI and Condor ain't going to happen, brother, but thank you for asking. Okay, and we're done there, and we're done here.